Hello, everybody, and thank you for tuning in to our webinar today. This is our year-end wealth playbook, what to do before December 31st. And we put one of these together every year. Grace and I did one last year. It was really well received. I can't believe we're here at the end of the year again today, but for our clients who've been going through their year-end planning meetings with us, this will be a great refresher on the things that we want to do and what we should be paying attention to. And for those of you who don't work with us or are interested in working with us, this is a great kind of framework of how our team guides our clients through year-end planning discussions so that you can either self-implement and take these things and do some or all of them on your own. Or if you're wondering, hey, what would it be like to work with a financial advisor? This is a great way to see, hey, what kind of value is provided when you work with somebody who can guide you through these discussions. So with me today are my two colleagues, Kellan and Grace. We are the financial advisor team at O'Keefe Stevens Advisory. I'm Justin Stevens, the co-founder and president of O'Keefe Stevens Advisory. Grace Stolberg is our advisor down in Miami, Florida, and Kellan Peer is at our home office in Rochester, New York. So the three of us today are going to share time and take you through our year-end planning playbook. Before I do that, though, I of course have to let you know that none of the information in this presentation is specific or personal advice to your situation. So talk with your financial advisor, your accountant, or your attorney before taking any of these action items and self-implementing. And also, because this is a recording, this information can change at any time. We've used sources that we know to be reliable and accurate today, but as with anything tax or finance related, those things could change at any time. So just make sure you do your due diligence and know that none of this is personalized planning advice. So up on the screen here today, I wanted to just quickly talk to the type of services that we provide here at O'Keefe Stevens Advisory. Of course, we do investment management work, which actually is kind of at the end of financial planning work. Everybody who comes through our doors to work with a member of our team first goes through a exercise where we get date specific and dollar specific with the goals that they have in their life. And usually those are retirement focused goals. So including things like Social Security and Medicare planning is the discussions. But a big focus in our work is about creating lifetime tax savings. So some of the tactics and tips that we're going to provide today really point to how do we maximize the tax efficiency of our financial decisions over a long period of time. And when we've built that roadmap, that plan, then we know, hey, what type of investment strategy do we fuel that plan with? What is appropriate for you? So everybody goes through a financial planning exercise. It's a standalone flat fee service that we provide. And if you choose to implement that plan, then we would go with our team, then we would go through with an investment management service. So just a little bit about O'Keefe Stevens Advisory. At the end of this presentation, we'll have a way for you to engage with us if you're interested in learning more about that. But why don't we jump into our agenda for today? We've got a number of key items that Kellan, Grace, and I are going to talk to. We'll start with foundational stuff of what we want to be looking at year end from a financial foundation. Then we'll talk about retirement savings and how to maximize those strategies. There are a couple of key tax planning initiatives that are important this year. And then we'll go to the investment portfolio checkup. And it's always a good idea to think about the estate and legacy context, right? Beneficiary designations. Do we have wills, healthcare proxies, powers of attorney? And we've added a couple of other key pieces of information, like for business owners, there's a special checklist that we follow. And then just general life and family planning, right? We talk about our clients' money, but it's really our family, our occupational aspirations, and our recreational aspirations that drive those conversations around money. So having these goal setting and objective focused conversations when we're having conversations about your money is a really important part of the whole process. And we'll leave you with some action steps on how to take the next step forward if you want to include any of this type of work in your own year-end planning. So with that, I'm going to turn it over to my teammates, and why don't we start with our financial foundation review. Grace?
Thank you, Justin, for getting us started. We wanted to start with the financial foundation review because this is really just the most basic piece of your financial structure. So first thing we always want to make sure you have is an emergency reserve. We never know when emergencies are going to hit. That's why they're called emergencies. So this is really the first thing we want to do. Review your cash flow, update your budget. If you use tracking software like a Rocket Money, Mint, whatever it may be, there's all these great platforms, or maybe you're a spreadsheet person like we are and track it yourself. It's just a good idea to check in, see what you've been averaging for income versus outflows, and then make sure that income need what you need on a monthly basis for everything in your household, whether that's mortgage, rent, groceries, entertainment. If you have a fund that you're doing, like a vacation fund, making sure that you have that times 3 to 6 set aside in ideally a high yield savings account. That's great. Review insurance coverage. So for a lot of people, this time of year is open enrollment. So it's a perfect time to check in on what type of health plan am I enrolled in? If I am offered life insurance, what do I have? Do I need life insurance? And if you don't know, that's a great time to call one of us, call your financial advisor, and see if you have a need for life insurance and what amount you should have. This is also a good time to check on your disability insurance. This is equally, if not more important than life insurance for those who need it. If you are earning an income and it supports you or supports a family, especially, or anyone dependent on you, we really want to make sure you have short and long-term disability. And we have some great resources to help find disability coverage if you don't have employer covered options. So give us a call if you need someone to help find disability life insurance, or just take a look at your benefits and see if it's the right thing. Also a good time just to check your home and auto coverage and make sure all your coverage amounts are current and that you're not overpaying for anything. Always happy to do an analysis on those current coverages and see if there's better options. Also, this ties into our estate planning that we'll cover a little, but it's super important, so we have it on here multiple times. Check your beneficiaries on bank accounts, life insurance, on retirement accounts, really any financial asset that you have. It's a good idea to just do a double check. Sometimes people think, oh, I have these all current, I remember setting them up. And then in a meeting, we'll say, okay, you have X, Y, and Z listed for beneficiaries on this account. And it's, oh no, that's not the case anymore. So you want to make sure that these are up to date. If your situations change, it's probably a great idea to go look at these and make sure they're current. Also a good idea to pull your credit report, review your interest rates on debt. If you have things like student loans, make sure your payment plan is the right plan for you. Sometimes people get stuck in these plans where they're paying a lot more interest than what they need to be over the life of the loan. So it's a good idea to double check. If you have questions, if it's a confusing thing for you to look at, which a lot of the times it is, we're happy to take a look at this with you. Also, kind of goes back to reviewing cash flow. Confirm that there's no lingering errors or auto pay things that are still going out for things that you don't want to be paying for, or for subscriptions that you thought you canceled that are still being pulled from a credit card that you forgot about. Just a good idea to do a double check and clean up before the new year. Also, one thing that I personally like to do is just tracking your overall net worth. So assets minus liabilities. It's fun to kind of have it in a little graph. If you have that inner like financial nerd to kind of track over the years what your net worth is doing. Ideally, it's going up and to the right, but it's still good to check in. And if you've had a year where it's down significantly or down at all, it's just a good idea to kind of do a little backtracking and see what happened, what the year had, what your habits have been, and if there needs to be some tweaks, it's a perfect time to kind of put an action plan for the year ahead.
For those of you who are still saving for retirement, there's still time this year to max out your retirement plan contributions, whether that's your 401k, 403b, TSP, or SEP IRA. There's also time to take a look at your IRA and Roth IRA to determine if there's a reason to make a backdoor Roth contribution, if your earnings are too high to just make a traditional Roth IRA contribution. It's also a good time of year for those of you who are no longer earning income to determine if a Roth conversion makes sense this year. Another note is HSA contributions. Take a look at what you have in there, what's invested in, how much cash you have. And at the end of the year, it's a good time to look at your FSA as well. You can only carry over a specific amount into 2026. So make sure that you're going to be meeting that. Another thing is catch-up contributions, which I'll review in the next slide. And for those of you who are over the age of 73, you need to take a required minimum distribution. So make sure that you're meeting that as well. A few key dates that I'll note is December 31st is the last day that you can make Roth conversions or take your RMD. And for those of you who are going to be saving into an IRA or an HSA, you have until April 15th. So if you're under the age of 50, you can contribute $23,500 to your 401k, 403b, TSP. I'll note that there's a catch-up contribution for those of you who are over the age of 50, which is $7,500. This year, there's a super catch-up between the ages of 60 and 63, where you can actually contribute an additional amount of money. You can contribute $11,250. So make sure that you're taking advantage of that if it makes sense for your plan. And then it drops back down to $7,500 over the age of 63.
One important note that I think some people have confusion about is the super catch-up. So the 11,250, that's a super powerful benefit to be able to kind of backload your retirement savings. So if you're coming up on retirement, maybe you're 61 and you're thinking, I want to be retired by 63. You have age 61, 62, 63 to be making these huge contributions to your retirement employer plans. And the thing that gets confusing is whether that supercharged extra contribution has to be Roth or if it can be just to your traditional 401k or 403b. That will change in 2026. So right now you can make it to either the tax deferred portion or to a Roth 401k, 403b if you have one open. If you don't know if you have one open, it's a good idea to call HR and figure out if you do. A Roth IRA, a Roth 401k, whatever your plan is, we're almost always advocating for people to make Roth contributions just because of the significant tax problem we see with people who have only built up tax deferred retirement savings. So call HR, figure out if you have this Roth option in your plan, make that supercharged contribution if it makes sense for you. And then just know that in next year and beyond, that supercharged contribution has to be into a Roth 401k, 403b. But for now, you have that flexibility. I'm going to hand it back to Justin.
Yeah, so the IRS keeps us on our toes with a constant changing of the rules and what tax status those contributions need to be. But with all those changing rules, there's always some kind of new opportunity that exists. And that's really where we've specialized in terms of figuring out, hey, based on your particular set of circumstances and what you're trying to accomplish, right, by having a plan, we know, hey, what levers do we have to pull that are within the parameters of the current tax legislation to maximize your outcomes as they relate to your goals. So some additional tax planning opportunities that exist here at the end of 2025. Historically speaking, we are still in very low tax brackets, right? So the recent legislation that was just passed extended our tax brackets. And those tax brackets, we believe, are actually very beneficial tax brackets. So we live in a progressive tax system in the United States, meaning you are in a marginal tax bracket, right? So you might be in the 22% tax bracket, and if your income goes up and you're now in the 24% tax bracket, that doesn't mean you're paying tax at 24% on all of your income, only on the additional income that has surpassed that threshold and puts that portion of your income in that tax bracket. So there's some things to be mindful of in those different tax brackets. And for people who are looking at Roth conversions in particular, we believe that we should fill up lower tax brackets, right? So if you're in the 12% bracket or the 22 or the 24% tax bracket, which is a big range of income, we actually want to be looking and say, hey, if we took money out of those IRAs that you've deferred your whole life and we could take it out and pay only 12% or only 22% tax, and we know because we've done a 30-year cash flow projection that in the future you might have to pay 24 or 32% tax on those distributions. Let's fill up those low tax buckets, right, through tax rate arbitrage. So this is the right time of year to do that. As Kellan had mentioned, those conversions are a December 31st deadline. And I would say, practically speaking, when you're dealing with the financial custodians, you want to get those done before December 10th to ensure that they're processed by year end. Another key thing that we're looking at, we have had some very strong market results in 2025, 2024, and in 2023. And there might be some significant capital gains that have happened in your portfolio. There also might be some positions that haven't done so well, right? So can we offset gains with some tax losses in the portfolio by doing tax loss selling? We got to do that before the end of the year. It has to happen in the calendar year to be recognized on your tax return. So pull up your cost basis on your non-retirement accounts, right? So this is your taxable accounts, individual brokerage, trust accounts, those kind of things. And look and say, hey, is there anything I could sell at a loss that would help me offset gains I've taken in other parts of my portfolio? The other big thing that is very top of mind for people who are looking at big gain positions here at the end of 2025, which I hope that's you, and we've seen a lot of that in our clients' portfolios, is if you're charitably inclined, can we take some of that money and ship it over to a donor advised fund or to your favorite charities of choice through batched gifts, right? So batched gifts allow us to itemize those donations on our tax return and get a current year tax deduction if we put that money into a donor advised fund or give it away to charity. And if we give them appreciated stock, the charity sells the stock, not the donor, right? So the charities are tax free. So they get to sell the stock, no taxes owed. Whereas if you sold it and simply gave the charity the money, you would have paid those capital gains. So a very efficient way to give away money is through highly appreciated stock. And for those of you who are taking required minimum distributions or over the age of 70 and a half, you can do something called a qualified charitable distribution. That's that QCD. And if you need to get money out of your IRA before year end for required reasons, or you simply say, hey, I want to get some money out of there, you can convert it to a Roth potentially, or you could give it to charity. And if you give it to charity, it never hits your tax return. So the qualified charitable distribution, great planning tactic. And then just final notes here, if you had big capital gains during the year, if you did Roth conversions during the year, you might need to make an estimate tax payment to the IRS or your state tax department. So go in and look at that. We don't want people having underpayment penalties on their tax returns. So if you need some help with that, talk to a CPA or your accountant, your tax preparer. Talk to us. We're happy to look at the situation. You have until January 15th to make those estimated payments. And then if you're doing any of these tax strategies that I talked about, you want to take a close look and say, hey, should I be using the standard deduction or should I be itemizing? And if you can rack up a couple of these strategies and get yourself into a situation where you can itemize, you might actually be able to reduce your taxable income by a significant margin. I wanted to just pull up the capital gains tax rates because I think this is an area of confusion for a lot of people. If you have capital gains as part of your portfolio's results for the year, or if you sold like investment property or anything like that, that gain gets added to your income. So for people who are taking Social Security or on Medicare, like those additional incomes can really push you up and might cause you to have to pay increased Medicare premiums or more tax on your Social Security. So this is why we want to try to offset gains with losses in the portfolio. And there's an arbitrage opportunity here as well, right? So if you can take capital gains and stay in the 0% tax bracket, take them. It doesn't cost anything. You can buy the stock right back and step up your cost basis so that you get to keep that stock and you won't have to pay as much tax on it in the future. And then the other thing to be mindful of is if you're staying in the 15% tax bracket, that's a pretty broad range. I hope you have $600,000 in income due to capital gains. That'd be wonderful. But if you're going to go over that, and then you're going to have an additional 5% capital gains, or plus some other Medicare surcharges on top of that, it gets really expensive. And that's on all of the gains. So that might be another key reason to look and say, hey, should I donate some of that money, or should I defer taking some of those capital gains and push them out into next year?
On the topic of your investment portfolio, this time of year would be a good time of year to check the allocation inside of those accounts. If you have a set goal for your 401k to be invested in different things, a lot of different industries have performed differently this year, so you might want to make sure that you're not too allocated in an industry, say tech. So if you actually, I'll note, if you do make trades inside of a 401k or an IRA, those gains are not taxable as they would be in an after-tax account. So you're able to rebalance those accounts without having to worry about capital gains. Another note that I want to hit on is evaluate the tax efficiency of your investments. So if you have a Roth IRA, you want to make sure that those accounts are fully invested in long-term assets. Those accounts you're going to want to be long-term planning tools. So having them invested for long-term growth makes sense. Jumping back to the time horizon, that's why we prefer to make date and dollar specific plans for everyone that we work with to know, are you ahead of schedule? Are you behind a schedule? Where will you be getting that money that you need to support you in retirement, or if you have a change in income? So that's really how we're able to judge what money needs to be set aside in short term versus what money can be set aside for long-term growth.
This item is something that people procrastinate more than any other thing that I see, estate and legacy planning. So it's not something that's ever fun or enjoyable really to talk about. But it's a very important thing, especially for the next generation, to save a lot of time and stress at a time that should be purely for grieving. Just to have everything laid out and smoothly transferring to the next generation or to charities, wherever you want it to go. This is something that you need to take on while you're still here, and really prioritize. So first on the list is just reviewing and updating your simple will if you have one, and trusts if you have those, making sure those are still applicable, making sure they're outlining exactly what you want to happen, who things should be going to and where. And then another item that kind of gets forgotten is powers of attorney and healthcare directives or healthcare proxy. So power of attorney, if you're unfamiliar, is someone who you designate to make financial decisions in the event that you're incapacitated. Healthcare directive, healthcare proxy is similar thing, but for healthcare decisions specifically. So both documents need to be in place before you need them. Of course, if you're incapacitated, you can't then say, okay, this person will make these decisions. So these are easy documents to create. Make sure these are updated and designate the right person to make these decisions for you. Again, check beneficiary designation. So bank account, make sure you have transfer on death or payable on death instructions. Same thing with any taxable accounts, joint accounts, make sure things are titled correctly. So we've seen this quite a bit just in our recent kind of planning cycle where people have established trusts where the financial accounts should be retitled to the name of the trust. And that has not been done yet because you think, okay, I made the trust, I'm all set, done with estate planning, but there might be some back end things that need to be adjusted. So just make sure everything is all on the same plan, everything is aligned to accurately reflect what you want to happen. Also a good idea to organize your digital assets and passwords. So if you're anything like me, I have a note of all of my passwords. My mom has a notebook of all of her passwords. Make sure someone just knows where that note or notebook is too. When someone passes, there's normally a lot of credit cards or things on auto pay that need to be turned off or adjusted. So it's just a good idea to know where all these passwords are, whether you use an app or a notebook. Just know where everything is make sure you have a designated person who can then find these things and use them when needed. Also a good idea to discuss your plans with trusted family members or an executor. So like the same person who you're giving this note with all your passwords to, just make sure the plan is communicated where needed. So people kind of have an expectation of what's going to happen, who's in charge of what. Again, back to Justin's earlier point about charitable giving, this is a good plan for people who have highly appreciated assets and want to, or are charitably inclined and want to kind of transfer some wealth while you're still alive and here to see the benefits that your gifts allow for. So if you are charitably inclined, it's a good idea to talk about different strategies and plans that we can use to make the most of your gifts. Also, just want to do a little shout out to this company that I've used personally for my own documents, and I recommend tons of people to use, is Freewill. So we have their little logo on the bottom. This is an entirely free website, as the name suggests. It's not like, oh, you can make this for free and then you pay $25 to print it. It's entirely free. It's an incredibly accessible and straightforward tool that allows you to create wills, to update previous wills. You can upload your current will and have it updated for you. You can also make your healthcare proxy and power of attorney through this website. So it takes about an hour plus, depending on how complicated you want your estate plan to be. But you can log into this website, create an account, make these documents, and then you just have to have them notarized. But it's a really great tool, saves you lots of money in estate fees if this tool is right for you. So give it a look if you know that you need to do any of these items, and hopefully it works. If you have questions, we're here to review everything with you.
And Grace, I will add, at the risk of potentially offending some of our very important professional partners who are estate attorneys, that it's not right for everybody, but it's certainly better than having nothing in place to go to free will. And if you have a complicated situation, like you're going to be dealing with estate taxes, for instance, there are a number of tools that go beyond what free will has to offer. So free will is a terrific resource to start with. But if your wealth has exceeded certain limits where you're going to be facing estate taxes, or if you have any kind of complications, right? You have the need for trust planning because you can't leave money outright to particular members of your family, or you want to include charities, that's where our partner network of estate planning experts and CPAs comes in handy. So if you don't know, have a conversation. We'll tell you we want our clients to do the most cost-effective strategy in all instances, but we do have some terrific partnerships out there with estate planners all over the country, and that is a very state-specific task. So if you don't know somebody and you're looking for some advice, we're happy to point you in the right direction. On this business owner checklist, obviously this does not apply to everybody watching this presentation, but we do work with many business owners. I am a business owner myself, so we have a year-end checklist that we take ourselves through and that we take our business owner clients through. We want to make sure in particular that we are current with our tax payments throughout the year. Every state has some different incentives. Some states have no business owner taxes or personal income taxes, so those are great incentives. But in states like where we live in New York, there are particular programs that we can take advantage of to help maximize the effectiveness of the taxes that we pay on our personal income via business tax deductions. So review those. Also, for business owners, you have access to more types of tax deferral retirement savings strategies like SEP IRAs, simple IRAs, solo 401ks, and those contribution limits can be very high. So if we're trying to save money in taxes because you had a high income year, these are the tools we want to look to. So do an audit and say, did I maximize what I could put away? If you had big purchases during the year, can you take Section 179 or bonus depreciation expenses and move those into this current tax year versus spreading them out over many years? If you can, it can be a great way to offset income. And if you don't know, you had a high income year and you don't have those expenses, you may want to look at front loading some business purchases so that you can write off some of those expenses to offset the big income year. And then finally, business insurance and the right liability structure, the legal structure of your business, that is a good thing to sit down and review with your CPA, your financial advisor, and your corporate attorney every single year as your business is growing, as we hope it will. Those things can change, and having an annual discussion to say, is it still working? Does it do what we want to do? Or do we need to make adjustments is an important feature for business owners as they look at year-end planning and setting targets for the next year. And then we are big on setting targets for the next year. We do a pro forma budget every year. We've got a great toolkit that we can share with you if you're a business owner to say, hey, how do we run our business? I'll give ourselves a little plug here. We're second year in a row on the Inc. 5000 as a company. We're in the Rochester Top 100 for the second time. We expect fully to make those lists next year. We've created a playbook on how to run your business through goals and budgeting that can be shared and transferred to other business owners. So if you're interested in that, pick up the phone and call me. I'd love to have a conversation with you about it. Finally, this time of year is a reflective time of year for people. And it's right before Thanksgiving. We should be taking inventory of all of the great things that happened to us during this year. It's also a wonderful time to be thinking about what do we want to have happen in the next year, right? So people who wait to set their New Year's resolutions until after the new year, they're limiting their ability to get prepped and ready to do those things. And so what we say is, hey, you got some holiday time coming up this year. Take inventory of what's going well in your life, and then start to think about things. Hey, where would we like to make some changes? If you're looking to level up any part of your life, right? Is it your relationships, your education, your finances? Is it your career, right? If you want to make changes, you gotta sit down and think, hey, what do I want those changes to look like? And define it specifically. You know, my family, we're living in Madrid, Spain this year. It was a goal we set 5 years ago. We said, hey, in order to do that year abroad with our kids at a prime time when they're 9 and 10 years old, we really have to start aligning all of our decisions to that goal well in advance, right? So it's a reverse engineering project. Define what your ideal outcome is, define an acceptable time frame to complete that goal. It wasn't going to happen in 1 year, but then start to measure and take inventory of, hey, what are the things we need to do so that I know I'm living on purpose towards accomplishing the things that I want to do in my life. So we've got some wonderful tracking mechanisms. My partner, Peter O'Keefe, he's a tracker. I'm a doer. We are a perfect match for being business partners, but the tools that we've created for accomplishing tasks and knowing how to change anything in your life. There's literally a book out there, Change Anything, that Peter has mastered the skill set in that book. We would love to share those tools with you, and make sure that if you're winning in areas of your life, you're taking time to celebrate. Make sure that you're carving out time for yourself, right? The US culture has created this demand where we work, 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 and you really do need time to recharge and review what's working and what's not working in your life. This is that time of year. If you're not having those conversations on your own, you need some help in terms of facilitating those conversations. That's what we love to do most. We'd love to be a part of those conversations. Kellan, I'm going to kick it back to you. Why don't you talk to anybody who's not currently working with us, what they need to do next if they wanted to schedule some time with a member of our team.
Yeah, so if you found what we were talking about valuable today, or maybe it sparked some interest and you decided, hey, I should start planning for the future, the first step in our process is what we call a discovery call. It's really just to learn some more about you, share some more about us, and learn, are we a good fit to work together? Like I said, completely free process. And if you just take out your phone and scan the QR code, you'll be able to schedule a time to meet with one of us to get going.
If you're not sure if you want to schedule a call yet, we also have all of our emails copied here. So feel free to reach out to us if you have questions, or maybe you need to schedule a discovery call later in 2026. I know this is a very busy time for pretty much everyone. So you can email us any questions you have. Feel free to send those our way and we'll get back to you. But thank you everyone for tuning in, for watching through the end. We hope you have a great end of year, great holiday season, and we look forward to talking with you again in 2026.